If you've been yield farming on Mirror, then unfortunately, December 4 might feel like D-Day for you. Let's find out why. Welcome to Crypto Saver. So I've made not just one, not two, three videos on yield farming on Mirror, and it was all centralized around a delta neutral strategy, simply a way to yield farm, leveraging up your money and having minimal impairment loss. Not a bad idea, right? Well, let's look at Mirror right now. So I've really sized down on all the different delta neutral positions I had on Mirror. Right now, I really only have silver going on. You can kind of see my short farm on my silver position, and then my long farm liquidity pool, right? So obviously the goal is that any gains or losses on my short farm are counteracted by gains or losses on the long farm. It's never going to be perfect one-to-one, but the whole idea is that the APYs will just supersede any losses that could occur there. And as we know, with this strategy, you kind of utilized Anchor, right? Just to kind of have a quick overview here, we deposit some money into Anchor. We then are able to use, Anchor gives us AUST. We could use that AUST as collateral on Mirror to short some assets. And when we short the assets, if we wait 2 weeks, we actually get the UST back for the value of the assets, that what they were worth on the day we shorted them. And then we can use that money to long farm, whatever you want to do. Again, a lot of ways to kind of leverage your money up here. And that's what we've been doing with this type of strategy. But things may really come to an end here, depending on how badly these APRs can drop and why they're dropping. For that, let's look at the documentation page for Mirror. So this is directly from Mirror's Don't Kill the Messenger here. Now, as we look at this table, this is a really important table to be looking at because it tells us the distribution of Mirror tokens over the years, what Mirror plans to be doing, right? So we have the genesis. This is kind of right before the launch really occurred. So again, if you're staking Luna, now you got a pretty decent chunk. They gave about 9 million Mirror tokens to Luna stakers. But what we care about is this right here, year one. Now, year one for Mirror began on December 4, 2020, okay? And the row that we really care about would be the M asset LP staking, which is at 89 million. So from 2020 to 2021, 1 year period, right, December 4 to December 4, they've minted and essentially given out 90 million Mirror tokens in the process. But what's going to happen year two? Now, at first glance, you might say, well, they're giving out 133 million. I mean, that's enormous. That's amazing. But no, it's not, because keyword cumulative, right? This already includes year one. What we actually have to do, if we open up a little trusty calculator here, we can take, let's say, 133 minus 89, and the number is actually 44 million. Okay, that's the difference between the two. So in year two, Mirror only intends to give out 44 million tokens. That's half. That's half the amount of tokens. And guess what? That's going to directly affect your APRs. Now, before we go and compare how it will change the APRs and the delta neutral strategy, let's look at this little tool here that I like to use from time to time, Alpha DeFi. You can kind of put the M asset either at the top here on the long APRs or on the short APRs. And you can kind of see a chart of how those APRs have kind of flown over the months, right? So I have silver. And the reason I bring up silver is because that is one of the positions, well, the only position I have on Mirror that I'm farming. You know, we can kind of say that for the most part, it's kind of been hanging out. I think like a 25 APR average is fine, right? I think that's a safe kind of mark to put it at for the long side. And the short side, I think, what is it at right now? 30. But it's kind of been as low as 9 at times, you know, for some time. I think 25 is also kind of fine to say, right? That it's been holding that level. So let's compare. Let's compare what would happen to these APRs post December 4. So we've got two columns, right? Left column, current APR, right column, APR post December 4. And these are APR calculations based upon the idea that you are delta neutral farming in the most efficient way possible, right? So let's start off on the left side here. Investment size, 1200 USD. We're using that as an example, easiest way to follow. Now, if we take 800 of that 1200, deposit that into Anchor for 19.5 APY, right? That's what we do at first. We head over to Mirror, just going through the steps of delta farming here, delta neutral farming. We use that 800 UST as collateral to borrow 400 UST of silver, which we then instantly sell into the market. That's how we get a short position on it, which we then earn a 25% APR, which we're kind of calculating using Alpha DeFi. We wait 2 weeks. We can actually claim that 400 UST from Mirror. Now we have 400 UST back in our wallet. And now we use the 400 UST that we left over from the very beginning, right? From here to there, with the 400 that we were able to claim from the short position, throw that into a liquidity pool, and 25% APY. Okay, simple. On the right-hand side, everything's exactly the same, right? Anchor, APRs, the same. Except for some reason I called it APR here and over here APY. Shouldn't have been the case, but that's what I did apparently. But if we scroll below, we can see short farm, APR, knocked in half. Long farm, APR, knocked in half. Not surprising. We just kind of saw that. Mirror tokens are going down in value. Not down in value, but less mirror tokens that can be given out. Now, if we go below here, notice how I have 2,000 earning. Where do we get 2,000 from? Well, that's actually what you have. That's what you managed to leverage your 1,200 to, right? Because we were able to use our Anchor deposit as collateral on Mirror to open up another position. And then that other position even gave us UST back, allows us to leverage up our initial money, which if you do the math here, 800 plus 400 is 1,200 plus 800 is 2,000, right? So we have 2,000 UST that's earning 156, right, from Anchor, 100 from here, and 200 from the long farm. Same thing on the right-hand side, except obviously the short and the long farm, the annual interest is cut in half here. Now, for the most important line is the last one on the left-hand side that represents today. Today, you'd be seeing a 38% APR on your investment size being that original 1,200, right? So you would make 38% return on your $1,200 investment. Post December 4, under these assumptions, you will be making 25.5 APR on your investment size. That's a big difference. It's especially a big difference because what's happening here is that this APR is actually coming down low enough that you might have to ask yourself, is it worth going through all these steps? Is it worth trying to speculate on a bunch of M assets and possibly deal with some level of impairment loss because the strategy is not a perfect delta neutral strategy. It is not. It is delta neutral the very first second you put it on, but the very next second it's actually a little bit lopsided. You just hope that it never gets too crazy lopsided, but it gets lopsided. Is it worth doing all of that to eke out that much more of a return when Anchor is just giving you a 19.5%, just like that? Little fees, nothing. You just put it in there and that's it. That's a question you have to be asking yourself because under these assumptions, it doesn't seem like it's worth it. Now, let's be clear here. Maybe the asset you're trading, maybe it's going to have a higher average short farm or long farm. Maybe it's not going to be 12.5% like I calculated. I think that's a relatively fair calculation by me, by the way, to make. It's a fair assumption for me to be making. Maybe it's going to be higher. So maybe you won't have that cumulative, what do we look at, like, what was it, like 20, 25, or 26%? Maybe it's going to be higher. But let's discuss what can actually happen on Mirror for your returns to actually get higher. And the number one most important thing is that the price of Mirror has to finally go up. Let's take a look at the charts. Ever since May, Mirror just sold off, came down, tried to get up a few times unsuccessfully, and has kind of been hanging out at around $2.50. Now, this has kind of stabilized the APYs on Mirror if you've been farming for the past few months, but it's a big if Mirror was able to go from 2.7 to 5.4, which is about here, well, guess what? It doesn't even matter that the amount of Mirror tokens being given out has now been slashed in half because you're making exactly the same. Because, again, there's a finite amount of tokens being given out. they're going to be given out no matter what. Even if the price of Mirror goes all the way down to a penny, or Mirror goes up to $100 a coin, those tokens are still going to be given out. So your APRs are considerably connected to the price of the Mirror token. If Mirror doubles in value over the next couple of months, which is not a crazy far-fetched assumption to make, considering that they could be minting half of the amount moving forward that they've been minting so far this past year, right? So maybe it has. Maybe it can finally start moving up. And if it does, those APRs that you're currently seeing right now, they can kind of stay intact. Let's hope so. Now, if some people leave the platform, right, they look at these APRs and they say, it's just not worth it, man. Crypto Saver, it's not worth it. Well, guess what? You have less people to share your tokens with, right? There's a finite amount of tokens. They get spread across everyone is taking part in the system. If there's more people yield farming, more of it is spread across more people, right? If there's less people yield farming, everyone gets a little bit extra on top, right? So maybe that can happen. Now, I wouldn't bet too much on it because you have something else counteracting that idea. And it's the fact that Mirror doesn't tend to add more assets to their platform. They want to grow, they want to get bigger, they want to have more traffic to their protocol and to their front end where people can actually just trade crypto without even thinking about yield farming. Well, they need more assets on the platform. Because again, there's a finite amount of Mirror tokens out there. Those tokens have to be spread across all these new M assets that are be coming out because you have to incentivize farming, well, they incentivize the liquidity on those new ones too, right? So that's also going to kind of bring down your APRs on each individual pool. So because of that, it all comes back to one place. The only way for the APRs to stay high of Mirror moving forward is that the Mirror token has to go up in price. And if we just briefly look at like what year 3 looks like, I mean, just take a look and see how much less. If we take 156 minus 133, it gets halved again, okay? So we basically went from year 1, 89 million Mirror tokens being given out, and then year 2 we calculated around 45 million Mirror tokens being given out, and in year 3, 23. That's really dropping down. So the only way they can really make up for this, the Mirror tokens just have to start going up in price. If they continue to go down, I mean, honestly, like it's just not worth farming anymore. Like if Mirror just manages to go under $2, I mean, I cannot even imagine how bad those APRs can get. Like it just wouldn't make sense at all to go through the struggles of farming through their platform if that actually happened, especially comparing to the easier return you'd be able to get from Anchor, right? But that's kind of an overview as to what to expect moving forward. It's going to be interesting. I would like to see Mirror go up in price. I know they have version 2 coming out over the next couple of months. It would be nice to kind of see that, and maybe that would be a catalyst for Mirror finally going up in price. We'll have to see. But if you enjoyed this video, give me a thumbs up. If you like anything Terra related, give me a subscription. Most of my content tends to focus on that. I guess all my content tends to focus on Terra. Any questions, leave them in the comments below. I answer almost all of them. Other than that, have a great day, and thank you for watching.